Yeah, morning trades. I'm recording this with about 30 minutes to go until the end of the US cash session. And as it stands at the moment, our opening calls for Asia are looking a bit mixed, actually, to be honest. We've got the ASX up about 20 basis points. An interesting setup we've got there. The bulls obviously want to see a push back into 77,000 and a continued sort of a run going forward. But we're just consolidating at the moment there. The Hang Seng, we're calling down about 0.6%. Obviously, we're going to be watching China today. It's been a whippy ride. Decent volatility as we go into Lunar New Year. Obviously, drip fed, further stimulus measures playing through. But we do get the CPI and PPI numbers coming through today. The market's expecting a fourth month of deflation in China. Does that give the PBOC more scope? Perhaps, but I think it also shows just how weak the internal demand story is at the moment. And you can also have a look at the Nikkei, which we're calling up about 0.5% at the moment. Obviously, those longs want to see a break of 36,400 to see a continuation of the move. We're just consolidating at the moment, but a break of those levels, and I think that probably argues for initiating long positions into that situation. If we have a look at the lead from Europe, we've seen a bit of a damp picture. Euro stocks are down 30 basis points. It was Spain that was the underperformer with the IBEX down 1.2%. We can go into sort of the news flow. We've seen a number of Fed speakers, Collins, Barkin, to name a few. We saw a pretty solid 10-year bond auction coming through, good demand playing through that auction, with the Treasury Department altering 42 billion off there of 10-year paper. We saw an Atlanta Fed wage tracker coming down from 5.2 to 5%. It's the lowest level since January 2022. Does make sense to look at that ahead of next week's all-important US CPI numbers, where the market's expecting core to drop from 3.9 to 3.7% at this stage. But something we are watching now. If we have a look at the moves in treasuries, it's been a pretty flat picture in terms of net change. There's not really been any kind of major moves, both in nominals or reals, across the curve. Tens have traded in a range of 413 down to 406, so pretty flat picture. And I think it's been probably pretty good for risk assets more broadly. If you have a look at the reaction in FX markets, the US dollar's had a pretty whippy ride intraday, as you can see here. The gains have probably been seen mostly in the stocky, in the CAD, and on the downside you've got the MEX and also the Swiss franc underperforming a little bit there. But a bit of a messy picture. Obviously, that's a reflection. We haven't seen any major moves playing through in the fixed income market or in the STIR markets as well. We've seen gold trading pretty much unchanged. We've got crude up a touch. And I think Nat Gas is getting a bit of attention. We're trading with a one handle as the big figure now. It's down a couple of percent, and technically it looks pretty ropey at the moment, so one to watch. But it's the US equity market where I think is getting all the attention at the moment. We've seen tech really firing up. Have a look at the intraday chart here of the NASDAQ futures. We've sort of just had a really, really strong trend day playing through. You can go into the S&P, and I think part of the reason we've seen a strong move, if you have a look at the S&P futures, we had a bit of a creep up into the open of the cash market. The futures started rallying. The cash market opened, we dipped down a touch, and then it was bang, it was up, it went, and the buyers have been pretty much in control up till we got a high on the futures of 5,020. We've got pretty good participation in the cash market with 65% of stocks higher. Discretionary's done all right, been obviously supported by Amazon, but Chipotle and Ford doing quite nicely in terms of percentage changes. Tech's been the outperformer, as you'd imagine, in the S&P sectors, and we've seen services working well. Bottom of the pile, we've got Staples and Energies taking out a few points, certainly Staples taking out a couple of points in that situation there as well. But I think you've got to go and look at the banks, and I think one of the interesting things there is if you have a look at the regional banks, and of course the New York Community Bank, that was seeing a bit of a tough picture. We traded down to 360, and then buyers stepped bang right in. The market's trading about 24% of these lows, and then we saw the KRE rallying quite nicely off the lows of 45.67. I think that was part of the reason we saw sort of broad risk coming back into the market as some of those regional banks, the commercial real estate troubled banks, are sort of put in a bit of a bid. But certainly the equity market looking pretty good. We've seen the cash market testing 5,000. We haven't quite broken it, but that would be something that we'd want to see in the S&P. But certainly the futures are trading along that lines. So a positive open expected in certain parts of Asia today. Certainly US markets outperforming. We're going to be watching those China CPI numbers today.